forward to your session, Tony and Kathy. And with no further ado, I would like to first thank you both for agreeing to do the session for our Don't Be Scared of Long-Term Care. One of the things that we've done this morning is discover that while people are generally afraid of long-term care, literally long-term care, they're equally afraid of the planning process. So the whole thing gets pushed aside. And we're hoping very much that during today's session, all of our attendees will walk away with new ideas and new ways to approach new product discovery, and really find the whole day was a treat. We're not giving away any toothbrushes, guys. So with that, let me turn it over to you, Tony.
Yeah, I think Zach's going to kick us off. He's got a personal story I think he wanted to share with the group.
Yeah, I worked with Tony and Kathy and about it. We had this conversation about it, so I thought it fits the theme, and I would start off with a personal story. So back in 2006, my father was diagnosed with stage 4 colon cancer, and he went into remission off and on, but it would always spread somewhere else, and he went through long battles of surgery, chemos, and many different treatments. But he stayed strong. He was there for my high school graduation in 2011. My college graduation in 2015, my wedding in 2019, and the birth of his first grandson in 2021. But in May of this year, in 2022, he finally started to slip and show real signs of the decline. And we were, so used to this strong person taking care of himself. And it was kind of a struggle to motivate him and care for him, even though that he had his wife and 3 kids, me being one of them, to sort of help take care of them. But it was a lot. I was a new father, so I was really living that sandwich generation thing that Carol always talked to me about. Carol actually did give me a lot of help in finding a caregiver on care.com. And we were a little hesitant about it at first, inviting someone into the home to care for our father that we cared so much about. But within the first day, and I'm not kidding, we were ready to welcome them into our family because they were so kind and supportive and understanding to all my dad's needs as his health declined. And you think you'll be able to care for someone when they get there, but it's hard once you see them actually get worse. But my father was, they weren't caregiver for too long. My father did pass away at the end of June this year. And, but I still maintain that hiring a caregiver was the best thing that me and my family could have done, just so we didn't have to spend those final days actually, with the, I hate to say burden, but with the burden of care. We could just spend it with him without having to also take care of him while we do that. And so I do appreciate you both letting me share that, and everyone on here for the opportunity to share that story. But yeah, it's a real thing that a lot of people are going through, for sure.
Yeah, Zach, thanks for sharing that with us. We really appreciate it, and sorry for your loss.
Yeah, but of course, we do want to get through to the planning is ahead, and so we can go ahead and move forward with just opening up this session today. So just with all that, everything that's going on, Tony, I do want to ask, what are some things that clients are hearing about in the news regarding long-term care?
Yeah, Zach, thanks for asking that question. And there are a few different things that are going on in the news from an LTC perspective right now. But I think the one that has really dominated our conversations over the past, well, over a year now, is what happened in the state of Washington, and then what is going on in some of the other states that are looking at what Washington did. So, when I talk about this, we all lived through, or I should say a lot of us lived through what happened in Washington from an LTC perspective. And we all see now that California has been in the news a lot lately around their program. They're getting much further along with that program. And I think a lot of us, I really accredit NAIFA to the work they're doing to help advocate in the state of California to do things a little bit different than what Washington did. But there are states like California, there are other states like New York and Pennsylvania that are getting further along in their state-run taxed programs that are going to have an impact to a lot of your clients. Those are the three that are, I should say, further along. California, definitely the furthest, but there are other states, states like Connecticut, Hawaii, Illinois, Maine, Massachusetts, Michigan, Minnesota, New Mexico, North Dakota, Oregon, Vermont, Utah. Those are the ones that we're tracking closely. And then there's a couple others, or I should say a few others, that we don't have as much information on. States like Alaska, North Carolina, and Missouri. But I list all of those because for those of you who work in one of those states, or for those of you who have clients or prospect in those states, you should really have a basic understanding of what happened in Washington, what's going on now in California, and then gather as much information as you can around what's going on in your particular state. And I say this because if you don't know where to start, this is something that we as Nationwide, our wholesalers can help out with. So I put a little bit of a Nationwide plug in there, but we definitely want to help out where we can from that perspective. But second, if you work with clients in these states, you should be planting the seed around long-term care with those clients. Have that initial conversation, have a good understanding of what their potential LTC needs should be. Talk to them about the different coverage options. And that way, if one of those states gets closer to coming to fruition, you can talk to them about what that potential tax could be to them. And I say this because for those of us who lived through what happened in Washington, when it came down to the last minute, there were clients, advisors, companies looking for LTC coverage, and there were no LTC carriers or no providers still left in the market to provide that. And the last thing that you want is for one of your clients in those states to come back to one of you and say, why didn't we have this conversation? Why didn't we talk about this prior to this, me having to be put in a position where I now have to pay this tax? So Zach, that's really one of the biggest things that we're seeing right now in the news.
Yeah. So keep an eye on those things if you are licensed in those states, or you have, multiple states you're licensed in, of course. So that's good. Kathy, I know we had some conversations about concerns regarding COVID in nursing homes recently. What are some of those concerns essentially that have brought sort of long-term care to light?
Yeah, I think this is the second thing that's sort of been in the news recently. And that is as if long-term care facilities weren't getting enough negative press. I think the pandemic really brought to light kind of some of the concerns. There was some bad press about people contracting COVID, even passing away in nursing homes. And I think that scared a lot of people. And I think adult children were afraid to put, their loved ones into a facility. I think parents did not want to go to a facility. And there was even it was even hard to get coverage at some time. So I think the main thing that this all boiled down to was the need for flexibility, and cash indemnity solutions offer that flexibility for people. They allow them to decide where they will get their coverage and how they want their coverage to be received. So I think that was kind of the biggest learning that we had from the pandemic, and even going forward, is that flexibility is key when planning for this.
Absolutely. Yeah. So we, of course, we cover those nursing home concerns. We cover those state issues and the federal issues. But Tony, what are some real good opportunities that we can for prospect to clients?
Yeah, well, Zach, those are two good opportunities there. I want to make sure we, what Kathy just mentioned, and then the different state possibilities. But where we've really been having a lot of success is talking about long-term care planning in the business space. And I listened to Carol's earlier presentation. She talked about companies who are working in this space. Nationwide is one of those companies. But this businesses, especially and business owners, they're always looking for two things. One is they're looking for a way to save on taxes. Businesses are looking, or especially those business owners, they're looking for those tax breaks. And they're also, especially in this environment we're in right now with retaining employees, is they're looking for a way to recruit and retain those key employees that they have. LTC planning in the business space gives them an opportunity to do both. And this is an area that there are not a lot of advisors talking to them about. So it's a great door opener for you, one with your existing business clients, but also to go in and talk to new clients about is, hey, I bet they've been talked to about their 401k or their health insurance, but not all of them, probably very few, have been talked to about long-term care benefits. And I guess following what we talked about earlier is these business plans, they're a great way for companies to address the possibility of what could be coming in their particular state. It's a great way to do an executive carve-out type plan. And, granted, some of these opportunities are limited in certain states that are looking at these programs, but in the others, it's a way to address the need for long-term care for the actual owner, potentially that owner's spouse and their key employees. Two, like I said, it's a tax efficient way to do this. And three, it's a way to make sure they're covered, covering those key high earner employees that are likely going to be impacted by any type of state tax that could come down the road for a state LTC program. Now, we've seen a lot of these small group plans put in place over the past 12 to 18 months. And it's a great way. You always look at these and you say, hey, I want to sell the business owner an LTC policy. Well, this is a great way to take that one sale and turn it into 3 to 20 sales. Zach, that's one of the biggest opportunities we're seeing.
I would say so. So with those opportunities and you're, turning into those bigger sales, how do you then get the conversation started with them? Like, what are some of the tips or phrases that you can use to really sort of open that up to them?
Yeah, Zach, we get this all the time. And I think three things that come to mind in all of the long-term care conversations are really starting with a focus on home health care. I think many people still think of long-term care coverage as nursing home care. And in reality, more than half of the initial long-term care claims do start in the home. So maybe launching a more positive conversation and focusing on language that talks about, let's discuss how to pay for you to stay in your home as long as possible, just in case you need some kind of care. I think the second thing we remind people of are consequences. Around here, they say women understand the consequences and they often drive this sale. It might not always be the case, but the women in the couple is more likely to focus on the consequences of not having a long-term care plan in place. So if you encourage, the wife to lead that discussion and she talks about legitimate concerns, I think putting a plan in place is more likely to happen. And the third thing, I think like every situation, words really do matter. And you want to use words that are positive to the goal in mind. Keep the conversation focused on long-term care solutions and not long-term care policies. That'll make you more of a problem solver and less of a salesperson. And also avoid such words as stuck and maybe replace them with challenge. No one wants to be a burden or be stuck having to care for somebody. But it is realistic to say that you could be a challenge to your adult children having to juggle taking care of you and their responsibilities. So I think making some of those tweaks will help you have a more respectful conversation, more thoughtful, but it'll also maintain a realistic discussion.
Yeah, and of course, when you're talking to your clients about that sort of thing, they understand the benefits and they understand that it's important to them. But I guess for advisors, what are some of the benefits they can see? Like what's in for them whenever they are helping their client? How's the mutual beneficialness happen? That's that balance.
Yeah, that's a good question, Zach. What's in it for the advisor? So I've always looked at this in a few different ways when it comes to the advisor's perspective around having a long-term care conversation with your clients. So the first thing is, if you don't talk to your clients about long-term care, someone else will. And do you want another advisor talking to your client about a potential solution for them or their family? Two, if you don't have the answer for your client, especially the answer from these state LTC program questions that will come up at some point in the future or are coming up now, then they're going to look somewhere else for that LTC need. And that might be, that might lead to one or two things. It's going to lead to either one, they will look to get the answer from someone else and they will find them, and that someone else will take the sale from you. Two, they will come back to you when it's too late and they're going to say, why didn't you bring this up to me? Why didn't we have a conversation around long-term care? Why didn't we put a plan in place? And now it's too late. I'm stuck. I can't do anything because I'm past the deadline. Both of those reasons, or both of those things, are reasons that clients leave advisors and go somewhere else. So don't be the reason, have that conversation. Third, if you're just, if you're looking at your clients, you're saying, look, I help them manage, I help them acquire, I help them build assets. I don't talk to my clients about insurance. Okay. That, we all have our lanes, and that's where we play, but make sure you're having the conversation with them around what the impact to those assets, what the impact to their portfolio might be in the event of that LTC stay during retirement. What's the impact to the portfolio if they have to pull from that portfolio during a down market to pay for long-term care? This has an impact on you as the advisor. It has an impact on the other spouse who may still need that income. And it's something that you can protect them against now. Because fourth, the potential and most important impact is the conversation that this depletion of assets that you're going to have with those beneficiaries. So it's likely that they're going to ask the question, why didn't mom or dad have an LTC policy in place if they do go through an LTC event? And how can you bring them into that conversation earlier? One, you can help the beneficiaries could potentially help make that sale. Two, you're covering yourself as an advisor because now the beneficiaries know that you did have that conversation, and maybe mom or dad decided that they were going to not put that coverage in place, but you had that conversation and the beneficiaries were part of that conversation. And then finally, from an advisor's perspective, it gives you an opportunity to have a conversation with those beneficiaries about their own financial plan. And if you are doing the financial plan for those beneficiaries, then you're in all likelihood, when that wealth transfers to them, you're going to be able to keep that as assets under management. And you're also going to have an opportunity to have that conversation with them earlier on, rather than when that time comes later on in mom or dad's life. So LTC, Zach, it's always an important conversation, but I hope this answered some of the questions as far as why that conversation is important from an advisor's perspective.
Absolutely. And I'm seeing a lot of messages in the chat just about state specific things or some of the things that we talked about. So what from here, what's the best way that you in your team can help them find solutions on that sort of on some of those areas?
Yeah. Kathy, you want to talk through the best way to work with our wholesaling team? You still out there?
I don't see her on the call. Maybe
right.
something, yeah. Maybe she lost connection.
Maybe. All right. Well, I can tell you that Nationwide has a team of wholesalers. Nationwide's got a team of wholesalers that work with individuals at the advisor level. Kathy manages part of that group. That team of wholesalers, they are life and LTC specific wholesalers. They are able to have conversations around what Nationwide offers, but Nationwide has been very active since what happened in Washington. So from a state-specific program perspective, we are partnering with organizations like NAIFA. We are also leveraging our own state lobbyists, nationwide state lobbyists, to work actively at the state level, specifically right now, New York, Pennsylvania, and California, to have those conversations and help influence some of the different programs that are being looked at right now. We offer a presentation that talks through what's going on at the state level, at the federal level. We're happy to partner with NAIFA to do one of those presentations. We're also happy to partner with any of you directly to put one of those in place for either you, your advisors that you might work with, or potentially your clients. Now, I will say it is very difficult for us right now as a carrier to have a broad level client presentation because everything that we know is changing on, almost a weekly basis. So our jobs right now is to help educate all of you as best as we can, so that you can have general conversations with your clients and help prepare them for what could happen. And I say could because some of these states that I listed, they may do nothing. But they are all actively evaluating these programs today. We want to make sure you're prepared to have those conversations.
Fantastic. I know there's a few questions in the chat here as well. Carol, did you see any that stood out?
Well, first, I think I should come off mute. And one of them was, if some states don't allow for opt-out, why would consumers be motivated to buy private long-term care insurance in advance of knowing what the state benefit will be? Here, I hearken back to what Tony just said. It doesn't have to be their particular state. In the case of PA and New York, they actually took WACare and just used that as their proposal. And it's okay to say whatever the state comes with will be a universal program, a front-end universal program. And so it's going to have a limitation on the benefit, whereas the products, say from Nationwide, they're more tailored to an individual and to an individual's needs. So regardless of what the state does, you know that they're not going to be able to do individual products. They're not going to be responsive to the flexibility that you find in Nationwide products. So for someone who challenges you that way, I would say that's a rather easy one to respond to. You care about getting them educated in advance of them having to make a decision, excuse me, about whether they have a product that would allow them to opt out of the state program if they wanted, or that they could use in conjunction with the state program. But I certainly think that the state programs give you more of an opportunity than a challenge, to be quite honest. Tony, would you agree?
Yeah, Carol, and maybe I can just simplify that. We don't know what any of the states are going to do. We don't know if a state will or will not allow an opt-out. We don't know if they can do it now, or if once that program's in place, they won't have an opportunity. We're advocating for opportunities for tax breaks in the future after these programs are in place. All that is speculation. And part of what I was saying earlier is have the conversation now around what's going on. What's the LTC need of your particular client? What type of coverage is available to them or could be available to them? And that way, if they can put something in place today, they may have the opportunity for some sort of savings in the future. But either way, this is a window, it's an opportunity, it's a way for you to start the conversation around long-term care that you otherwise haven't had, and leverage what's going on in the States as one of those conversation starters.
Right. I see that there are some comments about the hybrid long-term care. Tony, have you seen that market grow substantially? Do you expect that more and more people will look to the hybrids for part of their solution?
Yeah, I can say the market has changed over the years when it comes to hybrid long-term care. You know, at one point there were just a couple of carriers in this market. It has grown, and you know, we're in this market now 10 years, and it's been an interesting market for us to be in, and it's been a great market for Nationwide. It's a market that, from our perspective, we have grown substantially in this space, and it is now a big part of what we do. Our long-term care business, because it's built on a life insurance chassis, it resides in our life channel. And because of that, our Care Matters product, our linked benefit product, it makes up a substantial part of what we do from a life company perspective. So when you ask if the overall market has grown, it is, I should say, shifted. And we are seeing a bigger part of the LTC market now fall in the linked benefit space. And you know, I think that's a lot of credit to the carriers who are in this space and some of the innovations that they've put in place to address some of the concerns that were in the LTC space, you know, just 5, 8, 10 years ago, and still exists today from a client's perspective.
There are several questions about Pennsylvania. Would you like to address that, Tony? Because you did mention PA is one of the states that put something together. Of course, we are all waiting for the midterms to be over. And, you know, crystal ball wise, do you think that, what does she say, that would Pennsylvania be something that they should, you know, find out more about? Will there be duplications, etc.? Excuse me. Is duplication a concern where clients, obviously most of us in the industry think we're in the opt-out period now, and should a client ask about duplication? Do you think that that's a valid question? Is it something that we can respond to at this point?
Yeah, like I said earlier, we don't know what the states are going to do. Now, what I will say is, as far as states that are furthest along, and the ones who have really looked into this, California, yeah, obviously Washington's program is already in place, so they're definitely furthest along. But as far as those who have not put one in place yet, California is by far the furthest along. They have really done an in-depth study into what they want to do, what they're thinking about doing. They've gotten a lot of feedback from different organizations, you know, NAIFA being one of them, and they're trying to put the right program in place for their state. Now, so I lump them in one bucket, and then fast followers behind California, you really have Pennsylvania and New York, and they have kind of almost cut and paste what Washington put in place and said, hey, this is something that we want to look at as well. And they're next behind California, but what they have not done is they have not done as in-depth of a information gathering as California has. They're not as far along as California is. And with that said, maybe there's a bigger window for those states. I can't, like I said, I don't have a crystal ball to predict that. But those are the 3 states you want to take a look at. Everyone else, I think, is behind those 3 states, or they're looking at programs that are very different than what Washington or California has started to put together.
I was just going to jump in real quick and say that I did hear that Kathy was able to dial back in. She is here. So if there's anything else you need to cover with her, then she's back here if she needs to ask her anything. At least I heard she was able to dial back in, but either way. Carol, were there more questions in the chat that came through?
Not that I saw. However, if people do want to ask another question, feel comfortable coming off mute and asking your question. We have just a few minutes left, so feel free to ask questions of any nature.
I just would like to make a
I do have a
comment.
question.
Oh,
My name's Gabriela.
Okay.
Can you hear me?
Yes.
So I started getting phone calls from clients. I live in New Jersey and cover Pennsylvania. I started getting phone calls from clients who have children living in Washington and working. And they started seeing the issue of this long-term care insurance that's going to be taken, or long-term care tax. So I have so far sold 2 policies to actually it's a nationwide life insurance with a long-term care rider that qualifies to young persons who will be taxed and probably will not retire in Washington. So this is an opportunity. It was only $100,000 policy each, but the parents paid for it or are paying for the premium, which is like $600 a year. And it also gets the conversation started and kind of solving this problem that we're going to have no matter what with long-term care. You know, everybody's going to need it at some point. So this is just kind of like an opportunity that appeared.
Yeah, that was, we saw that opportunity a lot in the state of Washington. You know, that window is closed from a Washington perspective, but it's definitely a conversation. You could take the learnings from Washington and say, you know, there's a possibility that this could happen in other states. We don't know what's going to happen yet, but like you said, it's a great way to start that conversation.
This is Vanara. Do you foresee any long-term care being offered with qualified funds? Because there's so many clients have qualified funds and they don't really have extra money that they can put aside for non-qualified. I know that there are some hybrids that are out there. I don't know which ones might be better than others, but what are your thoughts on that?
Yeah, we have a program, we call it QualCare, where you can take qualified dollars and move them into a Care Matters type policy. You do still have to, you know, you do have to pay taxes over some distributions that go into to fund the policy, but you're able to spread that tax over a period of time. In our case, it's 10 years. But you're right, that is an opportunity. And there are other programs out there that are also available that play in that market that do something very similar.
My concern is a little bit about the leverage that then is associated with it when it's spread over the number of years.
Yeah, it does except in New York, it does impact the leverage a little bit. But right now, you're usually leveraging a SPIA type contract or an annuity type contract for those payouts. And with what we're seeing right now in the interest rate environment, those SPIA payouts look very good today. And you're able to buy more leverage than you were able to purchase previously because of that.
Thank you. And if we were interested in finding out more, how do we, I do apologize, I was a few minutes late. How would we reach you?
Yep. You would reach us through one of our wholesalers. And Kathy, are you back on the line now?
I think she
We'll make
dropped off again.
Yeah, we'll make sure you get that information through Carol and Zach as a follow-up
Can you-
from this call.
Okay, thank you.
Hear me now, honey? Sorry.
Yeah,
Can you
we,
hear me
we
now?
can hear you now, Kathy.
Yeah.
Complete crazy technical difficulties. I apologize for that, everyone. We do have wholesalers across the country that cover all of the states. In addition to that, we also have our advanced consulting group and our Nationwide Retirement Institute that you all have access to. And they provide things like presentations and sales ideas, as well as consults. And we also have some digital tools that you might all be aware of or might want to use. We have a long-term care cost calculator and then a healthcare assessment questionnaire. So just some additional resources. We'll send out the map. We can get that information out to all of you so you can see who your wholesaler is that covers your territory.
There you go.
We'll make sure that the participants on the call receive a copy of this.
Perfect.
If you guys are still taking Q&A, I wanted, this is Brian Rossoff in New Jersey. I just kind of wanted to get your thoughts because I'm working on a couple of cases right now about the difference between using VUL and IUL with LTC riders and, you know, looking at the multiplier. Some people profess to say use 2, some say you can use 4. I just got, literally, this is perfect timing for this.
Yeah, I can talk through that a little bit. Brian, this is an interesting question. It depends on the situation as far as what's best. We offer our long-term care rider. It's on all of our individually owned life insurance products, the permanent life insurance products. And then it's also available outside of New York. It's available on our indexed survivorship product. So the way I always look at it is if your primary need is life insurance, life with LTC is a great addition. It is a perfect way to cover the life insurance need and then add long-term care to that policy. If your need is 100% long-term care insurance, then you're going to get a lot more leverage along with the opportunity for inflation protection with a linked benefit type product or, you know, Care Matters and Nationwide's instance. So we offer both. We can talk to you, or our wholesalers can talk to you about either opportunity, and whichever one is the right fit for that particular client. But that's really the intent of both types of products.
Thank you.
Any other questions for either of our presenters?
I have a question about the statewide circumstance. I know there's a lot more uncertainty than certainty at this point. And states are deciding whether or not to announce an opt-out period. But do we have to worry about people who've had maybe long-term care insurance for years? Any of our clients in any of these states being forced to pay a state tax to get more long-term care coverage?
Yeah, that's an interesting question. So a lot of the states so far have said if the policy is already in place prior to, you know, a specific date and it qualifies under their requirement of a, you know, policy, then they're enabling those people to opt out. Now, is there the possibility though that they could include them in the program as well? There's a possibility of anything right now because none of the plans except for Washington have already been put in place. And then the other thing to make sure you're paying attention to is, with Washington, there was a process that they had to follow in order to opt out if they already had a policy in place. So if you do hear that client or those clients' particular state does put something in place and they put a similar type of program in place, make sure that they follow that process, get that letter, get that to their employer, and all of those types of things.
Thank you, Tony. Anyone else before I thank our guests for a very informative session?
Yes, I have a question, please.
Go ahead, Cheryl.
Indexed annuities, I know Nationwide has one, but did they qualify? If the indexed annuity has a long-term care, home health care, medical feature on it with a rider, did they qualify for the exception for Washington State?
Now, Nationwide does not have one of those type of products. And I guess I don't want to speak for other carriers' products and whether they did or didn't opt out. So, Carol, I might put that back on your group around that. I will say from a Nationwide perspective, we did not have any annuities that qualified from an opt-out perspective in Washington.
That is something that Cheryl is a very specific answer. And I would want to, before I speak to it, I would check with our government relations people and perhaps with our lobbyists there as well, just to be sure that we give you the right answer. So Zach, if you could just make sure that I follow up with Cheryl for that answer.
Absolutely.
I think that's the best way to approach it.
Thank you.
Welcome. Anyone else? Okay, I want to thank the audience or the Zoomers for participating. The best sessions are the ones where we do get interactive questions. I, of course, want to thank Tony and Kathy for participating in our Don't Be Scared of Long-Term Care, Don't Be Scared of Long-Term Care Planning. So with that, I will turn it back to Zach, and he'll let us know if we have time for another cup of tea for me, and what's our next session.
Absolutely. And Kathy, Tony, thank you so much for being here today. It was fantastic hearing from you, and I hope to see you on more NAIFA event webinars in the future as well.
Yeah, thanks for having us.
Thank you.
Of course, yeah.
Thank you.
We now have another break for about 15 minutes or so, and we will be back with the next session with Ramona Neal, who's the president of Living Benefit Review. And that session is called Don't Be Spooked by Living Benefit Writers. So we will, like I said, stick around, same Zoom link for the whole day. We will see you in about 15-ish minutes. Thank you so much.